get analysis from the market. Shana Sissel is with us. For more, CEO of Banríon Capital Management, which helps independent advisors with alternative investing options. And currently, you've got $4 billion under advisement. And I'm really interested into ultimately how much macro the Fed is guiding investment choices right now, or how much you can think about AI and productivity and technology still winning out.
So I think you got to think of those things in two separate ways, right? There is the current economic environment in which the Fed has been tightening. They've been raising rates for a while. They've tried to get inflation under control. The ramifications of that is that it softens labor markets, it slows growth. The goal, of course, is for it to slow growth, not make growth go negative. And we're seeing that kind of play out because it's more expensive to borrow money and the capital markets are reacting accordingly. You can think of that as the current environment and still believe that technology trends like AI win longer term. And it doesn't change the fact that companies, when they look at where they're going to deploy capital and where the opportunities lies, are going to do it in the places they think they need to develop in order to compete going forward. And so as they make those capital deployment decisions, they are looking at things like AI, which is the number one thing that they need to be considering to continue to stay competitive. A great example is Apple, right? Everybody was down on the stock prior to their announcements of how they were going to be incorporating AI into their iPhone platform and into their other devices, right? Before that, everybody was like, oh, they're behind the 8 ball,
Shana,
and the stock hurt.
Let me jump in here, and I'm sorry to cut you off. I actually want to continue with some of the real-time reaction to those Fed Waller headlines. One of the alternatives that you track closely is Bitcoin, right? And when we got the jobs numbers, Bitcoin jumped and was in positive territory for much of the session. Going into those Fed Waller headlines at the top of the 11 Eastern hour, it was markedly lower, about 2.5%. It came off that a little bit. Use that case study of one single session to explain why you track Bitcoin so closely for your clients.
So again, we think Bitcoin is using, or even ETH, it's crypto in general, are taking advantage of a technology of the future in blockchain. Blockchain is a protocol, and we've seen the revolutions of protocols throughout the history of the internet. Everything from voice over internet protocol to HTTP is a protocol. Like, these are all protocols. Blockchain is a protocol. Bitcoin works on that protocol, and that is a future technology that we believe will be great, more largely adopted. What we saw in the short-term reaction to information had more to do with a risk-on, risk-off trade, not necessarily the adoption of the protocol. So you can believe two things at once. This is the difference between a trader and a long-term investor, right? You can believe that in the short term, you're going to have market movements that you can profit from. And you can also believe that I don't care about what happens on one individual day, but the longer term trend wins out in the long term.
Shana, is that what's happening when we're looking at the likes of Broadcom today or Nvidia last week? That it's the trading that sends them so much lower on actually pretty fundamentally decent numbers in the long term, but they disappoint because expectations have run so far, so fast?
That's exactly right. Now, there's two different types of analysis in finance, right? There's technical and there's fundamental. So the fundamentals remain strong, but the technicals broke down. And the technicals drive a lot of the algorithms that move the markets these days. And so that's why you can see these short-term price dislocations that occur, even though fundamental information and the actual company itself is in good shape.
Shana, you stated a line that I've been using all week, which effectively is one session a market does not make. But I just want to stick with what's happening right now. We had that statement from Waller. Tie it all together, the post-mortem of NVIDIA, what the expectation of what the Fed will or won't do this month is, and where you go from here.
So the post-mortem of NVIDIA is that NVIDIA is a great company doing great things and that has really attractive growth, just not the attractive growth that they had before. So when you were experiencing 400% increases in revenue and you fall to 150, that is a decline in your earnings momentum, but it's still 150% increase in your revenue. And so overall, as a long-term holder of NVIDIA personally, I believe that the stock wins in the long term. I followed the stock forever. In the short term, what you're seeing is that disappointment and the stock coming back to reflect more closely its fundamentals when you start to look at price to earnings and things of that nature. So post-mortem, I think long-term NVIDIA good, short-term we probably have some volatility. In terms of the Fed and what happens next, I think today's data and the comments that came from Waller suggest that the Fed is still in line to make a rate cut this month. And it will be the first of many. And the question really becomes, how big will that rate cut be? And there was nothing that came out in today's data that suggests that it should be anything more than 25 basis points, in my opinion.
Shana Sissel, CEO of
Maybe you missed did I miss another question you asked? I think you asked.
No, I mean, my goodness, you took what I asked and you really ran with it. We appreciate it. Shana Sissel, CEO of Banríon Capital Management, thank you very much.